All right, good morning. It is 7:02 on Wall Street, approximately 2.5 hours before the open of trading. It's time to get your global macro on. So, welcome to QuantBox Live, where our AI driven data analysis of sentiment, inflation, employment, GDP, technical trends, open trade positioning, and seasonality, and a whole bunch more, way more than that now. There's been so many upgrades over the last year or so, year and a half of QuantBox, many more upgrades since then. But, anyways, we need to take a look at what's going on now versus what's going on in general. That's the difference between the long run and the short run, and thread together opportunities or uncover the risks and perils in front of us. For example, there may be no underlying intrinsic trend. So, whatever you see is a mirage, and a mirage is a fancy way of saying opportunities to lose money because you don't get what you expect. Yeah. We look at institutional um, stocks and flows of capital. We look at central banking forecasts, not opinions, but forecasts. And then, of course, we look at multiple markets, volatility, yields, dollar, yen, gold, S&P 500, so much more. We look at hot money and we look at options. Yeah, so much going on right now. So hey, YouTubers, it's only $80 a month to trade like a institutional investor, where you organize your thoughts, buying things you want to buy, things you want to sell, everything neutral based on logic and intelligence. Amateurs just fly by the seat of their pants and they lose their money. So, YouTubers, swing on by QuantBox stock code. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Cool. I guess we can check out this morning's the latest AI alert. So, once you have an account, you can upgrade your account to get updates. And do I have it on this phone? Oh yeah. So at 5:58 a.m. my time. There we go. There's a moving pound dollar. Yeah, did you get the news? Falling wages and rising unemployment. That might be really good for the UK. So, anyways, the report says a score flip for pound dollar became more bullish, euro CAD became more bullish, and Bitcoin went more bearish. Uh-oh, spaghettios. And then, of course, I got a pre-London report, and it was much more extensive pre-London. It talked about NASDAQ, pound dollar, euro CAD, so those were repeated, euro Aussie, CAD yen, pound Swissy, euro Swissy, all before the London Open, just minutes before. Look. Okay. That cost something like 88 cents a day. Yeah. Something like that. $1 a day, less than $1 a day. Boy, so that saves you even more time, is what it comes down to. Because you may not always want to log into the database and cycle through the pages you like to review, and then cycle through the currencies you want to review. You don't always want to do that. You're just like, oh, look at that, pound dollars, Oscar Mike. I think I should take a look at that, that kind of stuff. Okay, so where are we today? Okay, yields are up. That's not good. Oil's given back a little bit. It was a bullish day yesterday. I think I got $2 on oil. And now it's come back, obviously. So this might be a buy a dip scenario for moi. Gold is just hanging out there. S&P 500 closed at an all-time high yesterday. Euro dollar, we were between, we were sort of closer to 109, and then we had that big move um, based on a couple of things. One, Europe cutting, and two, France in a political mess. That came down, all while the dollar happened to be relatively strong, anyways. And a big risk off day in Bitcoin, huh? Holy smokes. Is that related to tomorrow? CPI tomorrow and Fed meeting. CPIFOMC. Maybe. Is that Bitcoin coming down or is that dollar strong? Yeah, both. But that's a big day. That's not three for everything else is a monster day. That's definitely down. So I don't know. We'll see. Right now, the markets haven't done much, so there's no evaluation. You'll have to look at a longer time frame, and you can see on a quick glance on the scatter plot, you can see all the metals are down and crypto's down. And is that disinflationary? Is that what's going on? Is inflation falling? Is that what's happening? Like, so we'll learn a lot tomorrow when we get CPI tomorrow. At 8:30. So we'll see, but that usually a move like this, like, let's put it the other way. If we had persistently sticky inflation, like a stagflation type scenario, if we had stagflation, you usually want to own real assets like silver, copper, platinum, and grains and stuff like that. And well, they're all fairly down, so that's interesting on the day before CPI. Okay, pound CAD. Remember, I got an email about that this morning, or was it EuroCAD? No, that was EuroCAD. Pound Aussie. Okay, pound dollar. Pound dollars one became a little more bullish. Now, Kiwi Swissy, CAD Swissy, Aussie Swissy, USD Swissy, pound Swissy. Uh, uh, maybe you should sell a Kiwi, huh? Or a Swissy. Sell a Swissy pair. Maybe, huh? Quick glances here, risk off in the money market. And look at this turn here. Okay. Look at this turn here. We were at 9. No, 8.5. And then now we're working our way back up to 9. So a slight tick up, and upticks are risk off. Okay. Remember, when it's falling, there are more call options. When it's when it's up here in the red zone, there are more puts. So right now, ever so slight risk off, not far different from this. This is slightly risk off as well. The 2-year at 4.87 and the 10-year at 4.47. Yeah, those are not dramatic, but compared to a couple of days ago, leaning towards the risk off. Yeah. All right. Taking a look at longer time frames. Mixed. Mixed. What do you think? Money came out of the market because of the Fed meeting tomorrow? Yeah, that's exactly what that says. Now, longer term, we are still risk on. Just not so we gave back anything on the weekly basis, huh? But looking out on the rolling 30 days, gold is down a little bit, and I score that good. Yen is still just slightly weak. That's good. Dollar is flat over the last 30 days. Dollar's done nothing. Wah, wah, wah. Big fat zippity zilch zero. S&P 500 is still up 2.58% over the last 30 days. Well, that's good. Okay. Yields, okay, are down slightly. month over month. Now there's been some vol, but we're just kind of back to where we were 30 days ago. So flat, right? And then volatility is low, but not like, I don't know, just yeah. So nothing going on there. Flat. And I think that's indicative of not new money coming in the market, just sort of money coming out of the market as we approach summer. Yeah. Yeah. Summer usually has a low volatility. Again, just a quick look at the money market. We're above the 8-day average. That's unusually high, and that's not good for really anything. So that you get, red. You get red. Like you ask it, how does that impact S&P 500? Yeah, it's not good. Let's take a look at the scatter plot a little more closely. Okay, Bitcoin down the most. Holy smokes. So I got to get rid of that, get rid of the outlier. And now what? Well, these assets in the bottom left hand corner have a negative bearish score by QuantBox. So by and large, what we're saying here is anything in that corner. So where's my drawing tool? Okay. Anything over here is down. Well, let's do it differently. Let's say everything to the left, oops, everything to the left has a negative score on QuantBox. And then here's what's actually happening. So everything down there is down and expected, and everything here still has a negative score, but is up. So Kiwi Swissy up, USD Swissy up, CAD Swissy up, Pound Swissy up. And if you remember, we looked at those, and those are things that we expected to have negative results. Well, there's up 0.5% or less than 0.5%. So these might be your sells for later today if they drift down below the zero line, you see? And then vice versa, everything up here, everything in this zone on the right has a positive QuantBox score. Okay. And then we differentiate where everything on the right, we expected to be up in this area, meaning it's up today making money. So yields are up almost 1%. Yeah. Pound Aussie up, pound CAD up, pound yen up. Pretty much anything with a pound is up today. Okay. Even pound Swissy with a negative score is up today. So everything is likely responding to that UK news I talked about earlier. Rising unemployment and falling wages. Yeah. Now everything in the below that was expected to be up, but is actually down. So Nazi's down a little bit, DAX is down a little bit, FTSE's down a bit. So many of the stock markets, if not most, looks like the Dow is up slightly, Nikkei is up slightly, S&P 500 up is slightly. So let's say, well, definitely European stocks are down. So, yeah, all right. So a little bit of a mixed bag, but nothing seems to be cray. Okay, especially if you get rid of, I think, commodities. So if I do that, our scatter plot really tightens, huh? And what that shows, and I've been training you on this, what that shows is when you scatter, when it looks like a circle or an ellipse, there's no trend. There's no trend. When you look at a scatter plot scientifically, and I did analysis, like I think on one of my final exams, I was given the bill of lading, I think it was, for the Titanic, and it showed the different passengers and like by age and by class, because there are multiple classes, and then you had to analyze it for different things, and you came up, okay, well, these people survived, but these people died, and all this kind of stuff. It was really complicated. But what that's all you're really doing is it. Oops, is what you're looking at. Okay, is the slope of right? Is there a negative slope going on? Is there a positive slope going on? And when there's no trend, when it comes out a circle, right, there's nothing to be gleaned. Just think of it this way: many of the things that were supposed to fall fell, great, but many things that were supposed to fall rose, and vice versa. So there's nothing there. There's no trend. I mean, you have to really now pick this apart. There's no underlying global trend in these assets. Okay. But if you drill down even farther and you do a little extra work, you'll say, well, what's up today? And you'll see, wow, there's a lot of pound and a lot of kiwi. You see that? And what's down today? Oh, interesting. A lot of pound and kiwi stuff, but on the other side of the um on the other side of the currency pair. So you're like, oh, well, I guess I could look at this and go buy some pound and buy some kiwi. Like, yeah, but that's a relative strength, not a trend, right? So yeah, you'd go out and do those. Sure, 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 sure. Mhm. Okay, so okay, big change here, but I think that in combination. So if you actually download and read the report, good segue. So today, I'm downloading and reading reports with the team at investorbootcamp.com in the swing trading room, swing traders and day traders. We're going to actually download and read reports. We're going to do the work that 95% of retail traders are incapable or unwilling of doing. Mm, cool. So, anyways, what you'll find is unemployment up, but wages down, and that's kind of what the Bank of England is looking for. And so, we have a meeting coming up next week, right? Yeah, here it is. So they're not going to cut here, but with this data, you know, the early fall, like September, is in the cards again for the Bank of England, right? If I could, I would. If I could, I would cut the rate. Yeah. So COT don't need to do that. We've already done this work. I thought it was very interesting. I thought that review was cool. Central bank stuff, okay, is slowly being updated, but of course what we're very very interested in is what in the world is the Fed going to do, right? Yeah. Looks like seasonality is working out fine. I did this one quite some time ago, and you'll see how. So I added this 9 months ago or something, and it just shows you this is the seasonality for dollar pairs and how exaggerated some of these moves have been this year. Okay. So it went up when it was supposed to go up, but it went up really fast and then is already swinging back around, but earlier. So, like exaggerated rallies and exaggerated pullbacks, strange exaggerations. Yeah. But we knew it would be different than average because of the election. And then the other thing we talked about back in January when when I guessed on the shape of these, it had to do with, yeah, not only is the election going to change, I know it's not going to be the same this year, but at the same time, we have a Fed that will change policy. It was certain then for sure. Um, and so that also changes the shape of the year. And oh yeah, oh yeah, oh yeah, for sure. Okay. So right now we still have June, July for oil, and that's what I always have in the back of my mind. Okay. Okay. We knew March and April. By the way, like it's in a course that I've documented it so many times. This is the time you start buying oil. We talked about it in January and February and March, and then we rolled in. Now's the time to start buying, and you keep buying. And then it peaks out on Canada Day. Like I've covered it for 20 years. This right, and it looks in general now. Remember, you're like, well, but it moved up and down and sideways for 3 weeks without doing anything. Yeah. So you panicked. But we're getting pretty average results as far as the shape of the season. You know, is there more to it? Yeah, maybe. Yeah, but nonetheless, kind of interesting. Like we looked at volatility. Volatility's been very low, huh? And volatility is expected to fall until Canada Day, and then it's going to rise ever so slightly. Yeah. So how does this translate? Well, you can actually trade the VIX. There are various vehicles for trading it. Talk to your local broker. But typically around here, like the July August period, volatility is extremely low because nobody's trading. And what I have taught for probably 10 years now is there's this period, sort of August to September, where you may be able to find the bottom of low volatility and a resumption of volatility. Now, why is there a resumption of volatility at that period? Traders come back from holidays and they start buying stuff. Oh, yeah. 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 Oh, for sure, eh? But look at this, like just all over the place. Holy smokes. Holy smokes. And yeah, gold not doing well, huh? Yeah. Well, I bought it during this period and did really well. But I did that for silvers, and now just not happening. Okay. This week, which is week 15, is a sell week. January. So this is like January, and that would be about February. Yeah, that's about March. Oops. Wow. Don't do that. And reset Zoom. Reset Zoom. Good. So right around here is this peak. And when you're two standard deviations above the mean, you sell it for reverting. Okay. And then when you're 2 standard deviations below the mean, you probably have opportunities to buy. And that doesn't even hit 2 standard deviations till approximately week 37 to week 40. So much closer to the end of the year. Interesting. So somewhere in here is a better week for buying. Now, people are not going to like that if I tell them, like, well, why don't you wait till week 37? Because I get asked every day about gold. I'm like, are you buying gold? Yes. Is China buying gold? No. Well, you should buy more gold if you want it to go up. You should replace China. But anyways, there's no, notice these odd opportunities. They don't show up very often. But week 13, 14, 15, and almost certainly it's right there. Yeah. Now, usually it does float up for sure. Yeah. Yeah. For sure. But since about this period, we've had the Fed cuts removed, right? The Fed cuts removed, Fed cuts removed, which means they leave interest rates high to bring inflation down more. Well, if the Fed is basically killing inflation, you don't need to hedge inflation with gold. That's the logic. Okay. Oil is the big winner so far in the last 7 days. And I bought it yesterday or the day before. So I picked the right horse. Nice. Yeah, nice, 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 nice. And I have $2 on it at one time. So I think I had it at 78 and I think I'm in at 76, something like that, right? So cool, cool, man, cool beans. We'll see if we can let her run. Nasdaq, remember I said I'm a bull on Nasdaq and I'm a bear on Dow. Yeah. So Nasdaq up, but yields are up, and so yields are not good because I want those to fall. So I'm short yields. So that's not good. So I got this one right. I got this one right. Not so much this one. I'm very heavily invested in the S&P 500, so that's up, and that's okay. That's not dramatic, but I'm good with it. Yeah, CAD week, South Africa week, Mexico is weak. You may know the new prime minister of Mexico. She was elected just recently, and now she's talking about changing the legal system, making big reforms in the legal system. And investors are like, "Wow, that brings uncertainty," right? So, anyways, Mexico's weak on that. That she's going to radically change everything. Yeah, and that's complicated. That even if it's good, it's complicated. Yeah. So my wife will rearrange the kitchen sometimes, and she's like, "I'm putting your wine glasses over here," and I still go to where they were 3 years ago. Or like, and then I go to another cabinet. Honey, where are my wine glasses? I'm like, they've been there for 9 months in that cabinet. I'm like, ah, honey, where's the can opener? It's been in the same drawer for 4 years. I'm like, well, I still go to the other place, right? So, anyways, but change, even when necessary, certainly brings some uncertainty. Yeah. Okay. Bitcoin down hard. I'm trying to collect a Bitcoin today. So down 5% for the week. I guess they're not ready to go to 75. And then here's, a telling sign too, like platinum way down, copper way down. these things tend to do well in high inflation, and so they have had solid negative weeks. And then Russell is kind of the flip side of this. This is where you get mixed. So why is Russell down? Well, I would argue that the Fed's not going to cut. Interest rates are going to stay high, and it impacts small businesses way more than growth stocks in the Nasdaq or multinational monopolies in the Dow. Okay, these are small businesses and they're less profitable when borrowing costs are high. So that would make sense, but then that means it's inflationary. So these things should be up, but they're down, and you're like, whoa, this is mixed. Yeah. Silver and gold neutral. Then why are these down so much? Right. So anywho, mixed bag. And we already saw that in the risk gauges, but you see how long you really have to look at all this stuff and start thinking about it. You're like, why is this going in this direction? Why is that? So things like the risk gauges and the scatter plot just do that very quickly. So yields still are probably going to go up. I don't like that. Gold is up, but you remember when gold was like a 12 or something? Well, gold is a 6. Pound CAD up, pound Aussie up, pound dollar up, pound Kiwi up. Okay, well, we just got very bullish pound news today. And QuantBox would say, told you so. I mean, dude, look, it's all stacked with pound. Like, come on. Right. And you could probably flip the other way and find pound on the other side of these things, right? Let's see. Well, definitely Swissy. Well, there's just not a lot of things with pound on the right. So, anyways, so definitely you want to take a look at those, and then look how quickly things have moved into neutrality. Lots of things in neutrality now, huh? Wow, wow, everything's neutral. Yeah, well, we know that. This is also confirmed by risk gauges, which do completely different math. They have no, it has nothing to do with anything here, but it gets to the same conclusion, right? So I would say, as you see things move to neutrality, you want to keep your powder dry, aka don't trade so much, yo. And so if you're going to do anything, maybe look at buying a pound or selling a Swiss franc pair. So you're either buying pound or you're selling Swissy. There's nothing else really to do but wait. Hmm. Okay, so and if you're long pound and long Swissy, you don't want to trade pound Swissy. Oh, Kiwi seem to be strong, but what about Aussie? You could do an Aussie, or you could do a CAD. So let's take a look. We'll start with Kitty CAD Swissy. Yeah. All right. Sell a rip. Ride the 21, baby. Projection for CAD Swissy could fall as much as 63.97. So let's just call it best case it falls to 64. We're currently at 65. Now, if it pulls back to the moving average, you sell it. Base case is if it just slowly farts around, yeah, but let's just say it could fall as much as 100 pips from here this week. Do you guys use these charts in your process? They're so clean, right? Was that Aussie or CAD? That was CAD. Okay. Uh, uh, and we can pull up Aussie Swissy. Okay. Nice. All right. Tighter range. Remember, if you reverse the trend lines, they're creating a channel for you, right? Trying to get that slope. That's not quite perfect, but so what is it thinking? Well, there's a midpoint. Okay, that's your trend, rise over run, calculates the slope. And so there's a general assumption of this. Now, inside of that, returning to the mean, okay, is how it splits it from base case to worst case to best case scenarios. And you can see right now we are riding that median line, which is this one. And I got to get that slope just right. All right. So right now, price is actually staying inside the lower bound. So it's very aggressive. Now, in an ancient world, we used to call that ride in the five, baby, ride in the five. And what I'm measuring as well is the 21 moving average, right? So at some point, we'll want to come back, hit that, and then revert probably to the lower bounds best case scenario. So that's all it's doing mathematically. And I've done the math for you 100 times. Um, but right now, okay, there's the base case and there's the best case. But I suspect as a trader, we've had this down, 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 up, sell, down, 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 up, sell, down, 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 down. Now, it could just be a little up, which is the best case. But at some point, it wants to revert back to the moving average and kick off that. So if it does that too, that's the worst case scenario. Back to the 20 and then reset, right? And then in lower low, lower high, lower low. Nonetheless, what's happened, like I know I take an hour to go through this stuff. You probably could have gotten to this conclusion within 5 to 10 minutes, even less than that. 5 minutes, and then pulled up this chart, and maybe you favor the CAD, maybe you favor the Aussie, and then you go to your charts and you set it up and you're like, oh, I guess I'm going to day trade, um, you know, pound long or a pound pair long or a Swissy pair short. Are you a bull or a bear on the US dollar? You're probably a bull. So you don't want pound dollar, right? So you go, okay. And are you a bull or a bear on Swissy? You're a bull on Swissy. So you don't want Swissy. But you could do a cross pair since you're interested in maybe selling some Aussie. Oh la la. So maybe you buy pound Aussie or you sell Aussie Swiss franc. Oh, yeah. Well, okay. Yeah, 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 yeah. What about pound kitty cad? Hoorah! Now, I think if you analyze this, like that looks good to me as a bull by a dip. Um, but I think this one's a little bit steeper. It's got a little more vol to it. You see how it's a little wider, which means when you standardized how much prices move from the mean, it's a little greater. And it's probably because of this big rally. So now it said, hey, dude, it's saying this. And it does say, dude. Okay. Let me draw this out. It says, hey, dude, this was bearish. Then we broke through, made a higher high, higher low, buy the dip. That's a 1, 2, 3. You know, I mean, see, here's what you have to do. Okay. The previous resistance becomes support. Okay, great. So then you get this monster move. Okay, great. So that all gets recorded as volatility. And now it's like, hey, dude, okay, we are getting ripper close now. What used to be resistance could become support. So therefore, somewhere around here, we could buy it. And the base case is we go here. The best case is we go here and form a new higher high. Hmm. Oh, yeah. And that looks good to me, right? So there's lots of things going on. Plan A here, plan B, plan C, all the way to, you know, preparation H. No, no. And it feels good on the whole. I never get that joke right. It's you can't quite do it because you wouldn't have plans A, B, and C, and D, and E. And but anyways, yeah, preparation A, B, and C. But on the whole, preparation A feels good. Sorry, child of the '90s. Yeah. All right. So, yeah. And by the way, because I peaked in the '90s, you know, a friend of mine, his nephew, his adult nephew. His name is Scotty, and I'm like, Scotty Doo. And I'm sure he appreciates it every time. Yeah, because he's Dr. Evil's son, Scotty, right? Yeah, yeah, annoying, right? Yeah, that's me. So I guess that's it. I'll leave you to it. I like it a pound, I like it a Swissy. You can spend all day doing that, or you can just look at the summary. Peace on earth. May the pips be with you. May our profits be above average.